25.
Welcome everybody to the Chinchilla Pickin' Podcast. It is April the 20th, 2025, 4:44 p.m. That's right. We are coming to you live on Easter. Not live, recorded on Easter. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I am joined by the one and only Nicholas Young or Nick Young. Nick,
How's it
how you
going,
doing?
Dave? I'm doing well. I'm doing well. We'll see if this one gets posted. Um,
This will get posted. I have fixed the issue from last time. So
I,
Nick and I recorded a podcast one time when Brandon was out. Oh, two no, one time
you
it didn't
you and
get
I did
posted.
one, and I think Brandon and I did one.
Okay. Well, I fixed the issue on that. Brandon is our IT department for the Chinchilla Pickin' podcast, which is why nothing ever works. Great guy, love him to death. But yeah, and so I'm not much better at all. So we're gonna move through. But yes, yes. I hope this one gets posted as well, Nick. Sorry, I didn't mean to cut you off.
No, you're good. You're good. I just had to throw the shade there from the last one. So it's been a minute.
Hey, we had a good talk at least. We
We
had a
did.
good chat. So there you go. We got
We
a
very
good
much
chat out of
did.
it.
It was a very, very good one. So excited to sit down again and talk some stocks.
How did your Easter? How's your Easter been so far today?
It was good. It was good. Family was in town, so saw them for a little bit, and then they made the trek back home today. So
Yep. Nice. Nice. I don't have any family in town. So yeah. And my daughter works at a hospital, so she's working today.
you
So
could have called me
yeah.
up. You could come have some Easter brunch. Come on, brother.
It's all good. I took a Easter nap this afternoon. That's what you do when you're an empty nester and everybody's gone and you don't have any family in town. You get Easter naps, while the rest of you have to stay up and continue to push on through all day.
Yeah, naps would have been nice. I think I got combined real sleep last night, about 4 to 5 hours. So
Young parent, young parent. I remember those days. You guys power through it as a young parent. You're able to do it.
hmm
I know my gym was closed today, so I woke up and I was like, I can't just not work out. I grabbed my hiking backpack because I'm getting a big, huge 2.5 week hike coming up in May, which you'll be back on the
hmm
podcast then too, Nick. Thank you for always jumping in. But I threw some books in the bag and I went on a 3 mile quick jog slash walk with some weighted backpack because I got to get used to it. So that was my
That's
workout
fun.
this morning.
Oof. Yeah, my run is usually again is late at night when the kid wakes up from the bedroom to his room. That's about the extent of my running.
You're right. I remember those days far behind me. I now have all my PTO to myself. No, I'm just joking. Not all my PTO to myself. I spend vacations with my daughter, so um, I have most of it to myself though, and so that's enjoyable. But nonetheless, it was a not too busy week. I did not listen to Brandon's last week podcast. Did you, Nick, by chance?
I made a little bit through. Usually how I do your guys' are drives. So I got through part of it. I didn't get to finish it. Um, you'll actually laugh because he went into bonds.
Nice. See that? I did laugh. That is great. That is
So
great. The fair and the
he
bonds.
he was talking. I don't know if he did it, but he didn't mention it in the group chat. But he did talk about buying bonds, um, which I'm always a little hesitant on. But you know he did mention bonds actually. Maybe he didn't mention here. Maybe he did mention in the group chat because he did mention actually that in the group chat. Now that I think about it, I don't know. I'm sleep deprived, so I'm excited. But I will kind of hit on a couple topics that you guys have talked about previously. Has been tariffs. Um, Obviously, the buzzword of uh, end of
April.
Q1, Q2.
Yeah, Q1 and Q2 right now. Still a buzzword. Everyone's talking about. I know we're gonna get to it here eventually. So,
Well, I figure we'll kick off with that first. We'll get it out of the way.
well, all right. Well, then let me get in the rules, please, if you can.
Fair, yeah,
Rules,
I
rules,
pulled a
rule.
Brandon. I pulled a Brandon. Sorry, my apologies.
Yep,
Go
you're
ahead.
good. You're good. Rules, rules, rules. Nick and I got together 5 to 10 minutes before the show, and we told each other what we're going to talk about. Actually, we did not. But you're here to lie back and forth, to bicker and to banter right here on the show for you. Nick, you are our guest. You get to go first. You get to lead the show because you're the guest. Give the guest the offer. And plus, I love going last because it gives me the last word. So go ahead.
Yeah, so tariffs. We'll go ahead and lean into that one. I think tariffs are something that probably people are tired of hearing about. But um, since Brandon's not here to defend himself, I figured it's a good time for us to dig into it. And since he also got is one thing he did mention last week, I know, one-sided. So tariffs, I think, are something that has gotten a lot of people afraid.
Yep.
And it's interesting because I think people are concerned about. Um, just where people keep saying they don't know where these things are going. And at the end of the day, I think it's been very clear that tariffs will be short term. You and I have talked about this. Tariffs will be short term. Nothing to fret about. And I think the biggest key that I haven't really heard from a lot of people, but I think needs to be addressed is it's a buying opportunity. We are in a heavy buying opportunity situation. A lot of things have taken stock dips over the past month-ish, and it's a good time to kind of reevaluate, hey, is there something out there that's really well priced to get into? Maybe something that was out of price before, and look at your options and kind of get into those couple things. I think there's some good short-term and some good long-term opportunities out there.
So I agree with you, but I don't want to just do it at a like surface level view here of the tariff and the tariff situation, right?
Hmm.
Because that doesn't help out anybody if we just sit here and, which I agree, and say, hey, this is a great buying opportunity. Go ahead and buy in. And when you have people such as Brandon who are out there saying tariffs are the world's end, it's horrible, tariffs are bad, 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 yada yada yada, and they explain why historically tariffs are
Hmm.
bad, why tariffs have brought down whatever before even there are a lot of countries out in the world that use tariffs currently and have historically forever, and they some of them seem to be doing just fine. Germany is one that is currently doing well, has a robust economy, a positive GDP number. I believe last time I looked at their GDP, wasn't it close to 5%? So they suffered during the first part of the Russia-Ukraine war. Heating oil prices went up tremendously. They have since stabilized in Germany. Um, but that's just one example. I could give more. Uh, I don't believe, and this is just me speculating and guessing, so I could be wrong. But when I look at the U.S. current tariff situation, what I believe is going on is Trump is using it as a bargaining chip. He does not have intention of keeping the tariffs on as long as he gets trade deals from the countries. And as long as he gets concessions from other countries, he will pull the tariffs off. So and the fact that there are people like Brandon out there who are saying this is why tariffs are bad, it's a moot point. I mean, it doesn't matter because he's going to pull them off, in my belief, after he gets what he wants. So you can waste your time talking about how bad they are, but if you believe what I believe, they're going to disappear anyways here after deals are made. Is that kind of where you stand as well, or no, or
100%. And I think one of the things to look out for here with the tariffs, to kind of go a little bit more granular, like you're talking about, Dave, is these deals start popping out. Okay, what are the deals that are being made with these other countries? Are we going zero for zero tariff? What other things are being tossed in there? I think that's something to keep an eye out for. The China bit will probably be going on for a while. That one I do expect that it'll be a little bit longer paced. Um, but I think you also look for these industries that are maybe a little less affected by tariffs. Um, and I think that's where I'm kind of curious. Is there's so one of the stocks that I want to talk about today, um, and I know you're not a big fan of cruise lines,
I'm not at all? No.
is Carnival Cruise Line. I think it's one that has a lot of positive opportunities to it. It does travel to other countries, but it itself, if you're hopping on a cruise, doesn't necessarily have a tariff basis to it. Yes, it can have a bump because of the economy or inflation, but you're not going to get a tariff increase on a cruise ship going from, three destinations, or if you're doing a longer one that has four or five. Uh, but I think the other piece there is people are still kind of, and this is a word I know you haven't heard in a minute, Dave, is since the COVID era. Um, it's weird to say that's past term, or past tense, but with COVID, I think the thing to call out here is people are still wanting to travel. Only so many people have been able to get out, so I think that's one area to really consider. And they actually have hit on four of the, and I didn't look farther back than this, but the last four earnings they've actually beat each time. Their debt has been consistently going down, quarter over quarter. So they're definitely ones to keep an eye out for. That I'm currently invested in and looking at getting more actually in here over time. But it's definitely good stock that I'm keeping an eye on more and more. I see it as a medium to long term. It's definitely a possibility for a swing trade, but if you're really wanting to get some value out of it, um, and you have the ability to ride through some of those tough times, I think it'll definitely be a long term trade.
I see it peaked in January at $29 a share, currently trading at $18 a share, so down 28% year to date. It I There's a number of reasons why I just don't like cruise lines, airlines. Number one is I don't understand a lot of the economic behind cruise lines. So I don't want to spend the time to fully understand it. And maybe I should because there is a lot of volatility in these cruise lines. Because they do go up and down, it might present a lot of good opportunities for swing trades from time to time. And that is something I specialize in, I feel like, is swing trading. I It would probably behoove me a lot in order to learn more about these cruise lines, but it's going from port to port and the costs for different countries involved in that, and then the tax situation. They've been heavily criticized by the current administration for avoiding taxes. I recently saw the Carnival Cruise Line CEO on CNBC doing an interview where he talked about that. He addressed that concern. He said, "We pay our fair share of taxes. We don't avoid taxes. We cover that." It it's an industry where I have not really delved into much on, and I haven't had an interest to. And so that's why, like, I yield to you. If you say Carnival is a good one to buy, that would be something I would say, my buddy Nick has, you know, called this one out as an opportunity here. I trust Nick. Nick, you've had some very good calls over the years. You've helped move me along in some calls, notably the oil one from way back in the day. So there's some good opportunities to listen to your friends when they come up with things, especially we've been doing this for years now, talking about stocks and investment ideas, and we've kind of built that trust and that line of credit, if you will. Um, but I'm not looking at cruise lines still. Even after your call, I like it. It might make me want to actually start to learn more about the economics of this and how their businesses operate. I know during COVID they dropped a ton. A lot of people made money, bought at the bottom. They moved up. It was great opportunity there. If you're thinking we're going to have that same type of movement now, is that where you're going with this?
I believe so. I think so. You're talking about the dip in January, which is actually what really got. I was already actually invested previously at a much lower number than that 28 you were talking about. Um, I actually was one of the COVID people who got into it originally then, and been keeping an eye on it. But I think there's some good potential because of what you talked about. So it already took a big jump, because of the tariffs, or I'm sorry, a big drop. So I think there's some opportunity there built into it. But on top of that, I mean, the industry has actually been seeing a consistent boom because of, again, bringing up that word that we all hate hearing, but COVID. Um, people
Because
are,
we
are
all we so I'm going to interrupt you here. We all hate it because no company should be saying COVID in any
I
earnings
know.
call. And it's 2025.
Well,
Nobody should be bringing it up.
the only reason I bring it up here is because their boom is still coming from people feeling so enclosed during that time that were stuck in their homes or felt restricted, and so you are still seeing. Um, Probably you're getting close to the tail end of it. You probably got another year, another 8 months, something like that, of a boom in that sector. So I think that's one to really look at. Another stock that I'm interested in, and I've been keeping an eye on for a while, and ironically, you just mentioned it, Dave, airlines, is American Airlines. It's one that it's a little bit more controversial, um, and I think part of the reason is of all the airlines, it's the one that's sitting the lowest.
Yeah, people don't like America. You've typically traded Delta over the years since I've known you. I haven't known you to really move into American Airlines. American Airlines has been slipping more into the Southwest type. People have looked at it as a one of the legacy ones, but now a lower cost legacy airline. And they've moved like if you move into a hierarchy, the public opinion is Delta and United would be the two highest U.S. I'm talking U.S. airlines, and then American has dropped down next to Southwest.
Well, and actually to your point, so I actually only have traded Delta once. I would only usually fly Delta.
Ah,
Um, but I've only actually traded Delta Watch, which was recently. We actually talked about that one. I threw it in the group chat, but um, got a little bit of a nice little profit off of that one. That was, when everything was down and their earnings were coming up, and I had a pretty good feel on it. And that's actually something interesting here with American Airlines is their earnings are coming up. I'm sure it's one you were probably going to potentially talk about. It's this upcoming Thursday, the 24th. United had really good earnings. Delta had really good earnings. I have the anticipation American Airlines had a lot of is going to have good earnings. I actually had to fly a lot recently in Q1, a couple times for work, a couple times personally. Flew Delta, flew American. Every time I flew airlines, the nose to tail plane was full. So I anticipate a really good earnings, pretty good jump here. Again, they took a dip on tariffs. They particularly though will have some impact, I think, because people's unwillingness necessarily to potentially travel out of their countries a little bit during all this. It doesn't necessarily affect the cost of the ticket, just how people can have some adversity and whatnot. They do have flights, I believe, or more flights than Delta United, I believe, going into Mexico and Canada. So there is some potential impact there, but American, I think, has some good potential. Their big kicker is debt. They are heavily indebted um, over other groups, so that's one I'm keeping an eye on. But I think there's some potential there. I think they'll have some good earnings here this week, and they'll have a little bit of a good bump.
okay, all right, fair enough, man. I I I see travel picking up. I see travel picking up everywhere. I see a lot of good positives for the economy. I want to talk. I'm going to bring us back now. I mean, are those your two calls for this week? Is travel all travel related? Because
I
I
actually
like them.
two more.
Two more. Are they travel related? Because if not,
They're
I want
not.
to pause here. Okay, let's pause here.
Okay.
Because I like your thought here that we are investing in travel companies, and here's why. The tariff conversation I've seen all over TV is that if we continue with this, we're going to move into an economic downturn. The economic downturn is here due to the tariffs. The tariffs are going to cause a recession. The tariffs are bringing the people down. No one's going to be shopping. I see horrible Jamie Dimons getting on TV every other week saying how bad this economy is going to be, right? We have not seen that in Q1 earnings. Q1 earnings are still good. They have said, and here's some of the comments I've heard is that even with this tariffs, some consumers are still out there shopping and holding up these stores. I don't know how much longer this can last, or consumer confidence is at an all-time low, consumer sentiments at all-time low, even with some consumers out there shopping. And so my point I'm making is that all this negative talk is happening everywhere across the media, but yet consumers are still shopping. They have to omit that and put it in somewhere in their language and acknowledge that, but then talk about consumer sentiment, feelings, and this could cause a recession. This could cause this. I see something happen if we don't do something now. There is never a statement that I have heard where this is causing this, and a factual statement based off of data and facts and saying this is a recession, this is a downturn. Those statements do not exist because we are not in a downturn. We are not in a recession. The tariffs have not caused anything like that yet. Either the numbers and the data do not show it. The U.S. consumer is still strong and spending, which is remarkable to me because when I look at other things, Nick, such as consumer credit card debt and household debt, And I'm amazed that household debt continues to rise and consumer credit card debt continues to go up. And I've been very critical of companies like Affirm and Klarna and how they are just taking advantage of U.S. consumers. But, however, having said all that, U.S. consumers are still spending. So there's not been a downturn in the economy. People are still out and about. People are still spending money. People are not saving money and putting it away in investments like they should be, which I would be in favor of because then my stock holdings will go up a little bit. They are out there spending. So I don't see this recession that everybody else is seeing. I have indicators I'm watching. One of them got close recently, but most of the indicators I watch are not saying recession. This is
Well,
all hype and speak from the media.
too on, on that too, Dave, is so you kind of hit on the points there pretty big. So debt is one that we're not dealing with the normal consumer. The problem is we're looking at it through the lens of a consumer of the early 2000s, of the 1990s, where people did have more control, where if their pocketbook was getting tight, rather than going into debt, they would pull back a little bit on their spending, and you probably would see a recession. I'm kind of like you. I'm looking at like 5-10% chance of a recession. The only way I see it happening comes to debt. If there's a debt bubble, and that there, well, I mean, as you said, there is a debt bubble. Let me correct myself there. There is a bubble if it bursts. Um, that's where I would see the chance of a potential recession. Again, I'm looking at 5-10%. I'm not seeing it as very likely, which is funny because I know you and I have talked about this years ago, and I was heavy believing in recession 2 to 3 years ago. But I think there's been a lot of changes macro on the macro level that are really making an impact that makes it feel like we're potentially going into recession. There's a big squeeze happening right now, um, but long term potentially has the opportunity to increase the value of the dollar, which that's what's going to happen when you're getting that squeeze is potentially the value of the dollar going up. Is there a chance that we can go into recession? The answer is always yes. Is there a likelihood that we're going to go into recession? No, I don't believe so.
I like the way you clarify that there, and I like the way you said you divided it into two. Is there a chance? Yes. Yet there was always a chance we could hit a recession. There's usually a correction every single year. A 10% drop in the market is the definition of a correction. Yes, I'm agree with you. The likelihood of it is small, right? Now there are things I watch like you. It's the credit bubble. That's number one. And there's a company reporting this week on Thursday that I'm going to be heavily interested in to see what they say, and that's Sally Mae. And if you don't know who Sally Mae is, if you're a listener, you're like, what's David talking about? They are a huge component of student loans. And back in September, student loans got turned right back on. Take 90 days later, okay, now people are starting to go into default on their student loans because nobody's paying them. Boom, take another 60 days later, now it's affecting people's credit reports. Now it's affecting, you know, they're starting to move through the process of going to court to start having what's the word where they take it out of your paycheck. It's been
Oh,
so long since I've ever been in that situation. But I have been in that situation. There was, yeah. But anyways, uh, that is what I'm looking. That's one of the indicators I'm looking at is the student loan side and where we at in that process and how many defaults are we talking about? Is it an historical normal number, quote unquote, or is it a unusually high number? And is it getting higher or is it stabilizing? Because you do have that in the first initial jump because nobody was making payments for years. So there's going to be a big initial jump, yes. But does it stabilize at a normal percentage? And that's one thing I was looking at. And that's one thing I was wondering. So Sally Mae reporting Thursday is one I'm definitely going to be interested in to see how this turns out, where this goes, and if that's going to be a big driver of people's bubble bursting where they just can't make payments on everything. So something has to go in default.
well, and to your point is kind of I'm kind of curious in that one too, because if you have people who are getting into heavy consumer debt, so you're getting credit card debt, and then all of a sudden, the student debt gets opened up again, and now you have all this leverage debt on one side, and you were expecting that your student loans, because you're being told we're going to get wiped out, so you weren't planning to pay them. Then all of a sudden they're kicked back on. It does put you in a tight spot, especially if you weren't planning for it. it will be interesting to see how that kind of resolves. So,
Yeah, and this goes back to personal finance, right? So I always try to, how do I insert a little bit of personal finance into this podcast here and try to help people? I have friends of mine who had student loans and they were put on hold. So what they did was they took their student loan payments, they continued making them, and they put it into a trust. So that as soon as it was turned back on, they had this money that was sitting there earning interest, earning money that they were paying into, and then as soon as it turned back on, they went ahead and then boom, big balloon payment on their student loans and paid it down quite a bit with the interest they earned on it because they weren't earning any interest on the student loans. And that was a smarter way to go about it versus, oh, hey, I don't have to make this $300 payment now. I could go get $300 a month in debt and credit card debt. That's poor personal finance. That's where a personal finance coach actually helps you. So that's some of the things I do. I try to help people. I have people I mentor in personal finance and stock and investment and try to grow them to the next level and been successful, by the way, with a lot of people. So
is that where you're instead of saying, "Hey, I don't have to pay my student payment, let's go buy a brand new car"?
that is not what I'm saying.
No, no, no,
And
no.
say,
I'm saying
oh
is
yeah,
the bad situation is like, "Hey, I don't have
yeah,
to make this payment. Let me go buy a brand new car." Oh crap! Now I have to make the car payment and the student loan payment.
and they can't. So one goes in
Exactly.
default, and so now that's one thing I'm watching. So that's one of the things I'm watching. But right now, the consumer is strong in America. We are spending, if and as long as what I believe is going to happen, which is Trump is going to cancel these tariffs once he makes deals, then everything's going to be really good, and we're going to have a strong consumer, and the Fed will probably cut rates.
So two more stocks to talk about. So one that I'm really interested in. You've talked about it. I don't know countless amount of times. I've talked about it. You already know the one that I'm thinking of here is Cooler. Um, I'm very interested in them here going forward. They had a really good earnings for Q1 or for Q4 um, end of year, and I'm really excited for what it's going to be going into Q1.
And they
Um,
partnered with NVIDIA this past quarter too, so that was a huge announcement.
yes.
Partnership with NVIDIA, and they have a partnership with the automaker. They still have not disclosed the name of the automaker.
Well, and I wonder if it's them or the automaker doesn't want that disclosed.
It was you have to know it was part of the deal in the contract they made
Mhm.
with them, but they did make a deal. It could be Rivian, could be Lucid, could be it's a US automaker obviously, so it could be Tesla, but I doubt given their revenue numbers that they reported for Q4. I don't see that as Tesla included revenue. I see it as more Lucid, Rivian, one of the other automakers,
But
maybe even Ford.
they bought a additional office space. They bought more production facility. They actually worked down their debt pretty heavily. So they're in a really good spot. I'm pretty excited for them here going into 2025. And then the last one that I'm really interested in, um, which Brandon will love this, is Disney.
I
I think Disney's not one I usually
thought
get
Brandon
the.
was off this week. We
Yeah, I
didn't.
just the problem is it's just so well priced right now. Um, it's down below 100. I think there's a lot of potential coming out. I know they just made an announcement a bunch of Star Wars movies. Obviously, you have a culmination in the Marvel series. They've been actually, oddly enough, they've been taking a hit on the Disney side of their movies, but I think that they are going to make up enough here in this other sector to really offset. And again, the other thing that I think is good for Disney, people are getting out. Again, we talked about travel, so I guess this kind of does fall into travel, but the parks, great source of revenue for them. Um, I see them as something that people are going out to see. I would love to see the cost of it go down. The unfortunate thing with the parks is they can pretty much drive that price up as much as they want, and people will keep going. There really is no, market price for Disney's parks. But I would like to see them bring it down, and I think where it would be really interesting too is if they brought the price down, they brought the price of some of the stuff in the like things to do. Like I've heard about building your lightsaber in there being pretty expensive. Build your own droid, pretty expensive. Bring that down a little bit, get a higher conversion rate. Um, because you have to imagine that they're sitting on supplies of stuff. Now, granted, not saying they're doing bad there because I'm sure they're making hand over fist. Um, but I wonder if the cost that they're sitting at is because of inflation or they're just, hey, the parks are so inflated with people. Can we keep driving the price up to get to a point where we're maybe a little bit more stable in the parks, bringing in a good amount of money, but making it a little bit more favorable to be there?
I agree with you that Disney is a value play right now. My concern long term for Disney, and short term swing trade, sure, great thing. Long term is the CEO. This guy does not want to stay at Disney forever. He wants to eventually retire from Disney. They keep pulling him back because they can't find a replacement who does as good a job as him.
They will eventually. I mean, the hard part is you have people that get their personal preferences in there, and they don't actually want to run the business as a business. And Disney's run into that a couple of times. You'll get somebody in there. Um,
Yeah, because Snow White was not his thing. When he came back, that was already in production. That was
mhm.
already going through. None of that was his, and it was a bomb at the box office. So he's taken over some projects that he probably wouldn't have pushed through if he was CEO.
I'm almost surprised they didn't just scrap it because of all the controversy that came out on that movie, knowing that you weren't going to get the money for it. Just take the hit, scrap it, and do it as a tax write-off.
Yep. Well, he didn't. So there you go.
But those are my four stocks that I am really keeping an eye on. There are a couple more out there, but I just want to stick to those four for now. If anything, I can give them to Dave, and we can either throw them in the comments too for the video, or I believe Dave can add it to his. What are your accounts? Your X account or your?
Just Google Chinchilla Picking Podcast. We're all over. Brandon and I both have an X account. I will sometimes comment. I haven't yet, but I wanted to comment on his posts. He hasn't commented on my post, but they're both Chinchilla Picking Podcast. I think his is Chinchilla Picking Space Podcast, and mine's Chinchilla Picking Podcast. We're both on X. We're both on StockTwits, Chinchilla Picking. You can find us. We're all over. We're on Instagram, TikTok, everywhere but Facebook. Everywhere but Facebook is where we at. So Facebook
So
does
you're
not have
saying
a
there's expansion possible.
maybe. We are going to expand to YouTube and have these up for video so you can see our facial expressions as we look at each other on these Zoom calls and record this, which is what we use. That's a shout out to Zoom, apparently. But yeah, that's that's where we're at on the consumer. Let's get back over to transition now, if you will, to my part. I did get some DMs over this past week from a few people, some text messages, some DMs. And one of the messages I find the funniest and the best is who left Brandon Beaver unsupervised? Was a quote sent to me in the DM. And I think that's the best way to sum up Brandon's podcast last week. I did not listen to it again. Brandon did reach out to me and tell me a little bit about what he covered, though. And I know you listened to part of it. So
The answer is you, by the way, Dave. You left unsupervised.
I did. I'm sorry. I apologize. Apparently he went off on a tangent a little bit about tariffs and a little bit about bonds and how he wants to get back into bonds, which is hilarious if you've listened to the show since the beginning, you and five other people at the beginning. But Brandon just tore into bonds, saying bonds are dead. He spent a whole podcast by himself. For our first ever podcast was Brandon by himself complaining about bonds and the state of the bond market. And that is how he got his nickname, the Baron of Bonds.
Now he's the buyer of bonds.
Now,
Brandon
yes, now
Beaver.
now he is the buyer of bonds. I like that. We might have to switch it uh, going forward. So let me get into a couple of things. I know we're moving along. I want to talk a little bit about cryptocurrency. A lot of people are talking about how all these transactions with the US dollar and all these tariffs is going to affect crypto. Are people going to invest in crypto differently? Well, Benjamin Cohen, he's a big analyst on Bitcoin. He's got lots of followers on YouTube, on everywhere else. He has come out and said that he sees Bitcoin continuing to outperform all other altcoins as altcoins lose value right now. And he says until the U.S. Federal Reserve relaxes its monetary policy on quantitative tightening, which in fact they have. They have relaxed it, but they are going to continue it until they get rid of the balance sheet that the Fed owns. So it's going to be a while. So this gentleman who is meant to be this renowned analyst is basically saying that until they finally get rid of the balance sheet and they reverse and do quantitative easing, I see Bitcoin continue to rise. So I take that as okay, Bitcoin's going to continue to rise for the foreseeable future, is how I define that based on knowledge of quantitative tightening and easing and where we're at currently in our Federal Reserve balance sheet here. I look at his statement and, I feel like it's someone who understands crypto but does not understand the Fed, the US dollar, and how it involves with crypto. Because here's how I look at Bitcoin. The Bitcoin really blew up. I mean, really blew up and became more than just a IT guy or people were into computers, form of currency. So when I look at Bitcoin's history, I look at when Cyprus failed. That was the first time that a government people were looking for someplace safe to put their money, and that's when Bitcoin had its biggest first boom. And then the world was introduced to Bitcoin as an alternative way of currency, of money, of way of an investment, an alternative of somewhere to put your money. That was the first, hey, hello world, this is Bitcoin. It was outside of the IT world, outside of the computer guy world. It was now introduced to everybody at that point, and it just really took off. I believe we're still going to see that as an opportunity, especially as time of tariffs. If people want to withdraw from the dollar and they don't like the Chinese yuan or the yen or the euro or the British pound, Bitcoin is always there. And Bitcoin is always going to continue as of right now to be the main crypto for at least a number of years going forward. I don't see an alternative currently in the crypto industry that's going to take over. The Ethereum has put up a good battle. They've moved away from crypto mining, so you don't have to be sucking on power into to go ahead and mine more Ethereum, and that's great for them. Solana has emerged as a big driver in video games and in meme coins. Solana's backed all those, so you have to buy Solana in order to trade all those and go into that aspect of it. So Solana has a big purpose there. Ripple has continued to try to be a big player, but they started off with trillions and trillions of coins, and it's just you're never going to get more than a few bucks out of it right now unless it's widely accepted globally among all countries and governments and businesses. And that's just not the case for Ripple. So they're always going to be that cousin that nobody likes but is still hanging around. And this is just the state of the crypto industry. So I see positive for Bitcoin. I've said that for years now. I continue to say that. People have complained about it. People have come up to me and said, "Hey, Bitcoin's going to drop back down. Look, it went up to 100K. Now it's back down to 80." I'm like, "Yeah, but 6 months ago it was at 40. So who's really the big winner here? You double your money if you got in back in September, October, less than a year ago. That to me is a great investment. It's going to continue going higher. I see it going above six figures and staying above six figures. That's the point I would probably look at selling might be above 200,000 a coin. Would be maybe the point that I pull out and take my profits. Maybe. We'll see. Nick, thoughts on crypto?
I'm not really a crypto expert. I will admit that from day one. Crypto, in relation to Bitcoin, Bitcoin is very reliable. It's shown to be extremely resilient. To your point, it went down. It's sitting. I actually have it as something that I'm tracking. I'm not trading it, but I'm tracking it. It's sitting around 84. I think 84,000 right now. It did dip below 80 into the 70s briefly, but you know, it's showing resilience. Again, I don't really understand crypto. from a currency standpoint. I get what you're saying from an investment standpoint. I don't think enough people talk about it that way. Like they actually talk about it as an actual currency every day. You're going to go out and buy your groceries in crypto and in Bitcoin.
I
I
would
don't
love
see
that.
that. I don't see that though. It does. It also doesn't change. The other thing is, it doesn't really changes from a tariff standpoint. The cost of something is still going to be higher. Yes, you can buy it in crypto. It's going to be crypto is going to be based in the value of the dollar, at least.
It's not though. It's not based in the value of the dollar.
Well, it is because when you, from my understanding, again, I don't know much about it. The very little research I've done in it, it has to be bound. It's bound to something, right?
It's not so like crypto is based on whatever currency you're in. So if I'm in Russia, it's based off rubles. If I'm in euros, based off euros. If I'm in wherever, it's based off that local currency and how much of that local currency can I get for my Bitcoin I own?
But all that ties back to the dollar because the dollar is the universal currency right now.
The dollar is used for all commodities right now, globally traded. There's a few exceptions to that around the world. However, Bitcoin is not a commodity. It's not traded in dollars. The reason why most Americans believe that it is traded based off the U.S. dollar is that when we report on the price of crypto, we report on it based off U.S. dollars. However, if you go to Britain, they report on it based off the price of pounds. If you go to Russia, they report on it based off what it costs in rubles. There's no base price based off a certain currency for Bitcoin.
But again, all those currencies are based off the U.S. dollar.
No,
All
they're
of them
not.
tie back to
No, they're
it's
not.
it is from the universal currency. The
All
value
right. So
the
this is where we
value
have an argument right here.
yeah the value of currencies around the world are all based upon U.S. dollar, with the dollar
How do you
backing the
get? All right,
world.
show me this. Lay this out to me, like I'm a grade schooler.
Well, the U.S. dollar is a U.S. currency. It's things that other countries get to back their own currency.
Yes, they
So,
buy
so in
dollars.
essence,
Yes,
everything in the world today is based on the U.S. dollar. Now, granted, is that a great strategy? Is that a great idea? All that happened back with Nixon when we took us off the gold standard. Um, actually, it all actually comes back out of World War II. He took us off the gold standard, and then everything blew up. But it all goes back to World War II. A bunch of countries basically said, okay, the U.S. dollar is as good as gold, so we're going to go ahead and we're going to buy U.S. dollars, and the U.S. dollar was what everything was based off of. Other currencies, commodities, oil. Oil was traded in dollars.
I think the euro is based off how strong the European Union is, not how strong the U.S. dollar is. And I'm just using it as
Yes,
one example. I'm just
I
using it
get
as
what you're
one
saying,
example.
but it's all converted back to like what the value of the euro is based off of the dollar. So you're right, it is based off of the countries, like what they're able to develop, what's their GDP, but it's all reflective of, because here's the thing, you can't say all currencies are reflective of each other. Something has to be a central point. Because if you say I'm going to trade 1,000 rubles for uh, let's say 10 British pound, at the end of the day, something has to be your converting. If you're doing that with every currency in the world, something has to be your linchpin, if you will, and that is the U.S. dollar right now.
That is going to be cryptocurrency. Crypto.
But again, what is the value of crypto? That's the issue that I have is
It's
is I
whatever
don't
we
see.
agree upon it.
So it's fluid.
Yes.
That's concerning to me.
Yeah, I mean, and they've tried to create stable coins to make it more to have that more stable tether that you're asking for. And some of them are tethered to the U.S. dollar. Some of them are tethered to other things. But I mean, Ripple has tried to be that transactional point from country to country, currency to currency. That's what they have tried to push as their main driver of that company, a cryptocurrency. This is what crypto is trying to become and take over and really become valuable in this regard.
I just again I look at cryptocurrencies. I still don't understand it. I don't agree with it. I think In my opinion, it's not. It isn't a great investment because I don't see a tangible. I'm not saying that people can't, because there's people I know that have made money on it, definitely.
So let me give you a tangible. So let's go back to Solana, right? You have all these meme coins, and meme coins most people believe are just ridiculous. They're pointless. They're fun. They're fun to trade around, mess around with, right? Some fun thing to do with your time. So in order to buy and sell meme coins or own meme coins, what do you have to buy as your base, right? That's what you're talking about with global currencies and trade. You're saying the US dollar is the base. So in meme coins, it's Solana. You have to own, say, 100 Solana, right? You own 100 Solana. Now, all these meme coins are based off of Solana. So I'm going to use one of my Solana. I'm going to buy 10,000 of, I don't know, this ABC meme coin out here, right? And then when I go to sell it, I get Solana back. I don't get dollars or pounds, or I get Solana. So why do we value Solana? Why has the value of Solana gone up so much? Because it's the base for so many things. Video game in-game currencies are based off Solana. All these meme coins, they're based off Solana. A lot of these business transactions are starting to become based off Solana. They were off a Ripple. So these cryptocurrencies are becoming the base. So you're saying you don't, people are saying they don't understand how it works in the tangible, but you just explained how it works in regards to US dollar and how other countries interact. You explained exactly what one aspect of cryptocurrency is in that regard. So now you do understand it. You just don't understand it in regards to crypto.
No, I understand it from an economic standpoint. But what I don't understand in relation to crypto is if I go out, right, and buy something in Bitcoin, and I trade somebody Bitcoin, right, for that item, there's nothing backing that. So
Correct.
in essence, like if I go out and buy something with a dollar, what backs it? The U.S. government, allegedly a whole bunch of gold in Fort Knox. Again, allegedly. Um, there are assets, there are tangibles. There, if I trade a company, there are assets, there are tangibles. With Bitcoin, with cryptocurrencies, it is entirely speculation. It is entirely fluff, in my opinion. And it's not to say that there isn't value there, because as long as people say there's value, there's value. The problem is, I don't know, let's say there's an EMP burst somewhere, or something of that nature happens, and servers go down. That Bitcoin gone like that overnight. There's nothing that holds it to a tangible. So I've never been a big fan of it. Now, granted, at the end of the day, a lot of stuff that we deal with in today's world, and I will fully admit this too, is virtual. How many dollars don't actually exist but happen through transactions in and of itself, through credit cards, creation of debt, all that kind of stuff that we've talked about already today. So, I mean, there's something there, but I don't know. It just kind of churns my stomach, and I've never been a huge fan of crypto. I've had another buddy of mine who
Gotcha.
tries to explain it to me, and crypto is something I don't feel comfortable with personally. So,
Gotcha. All right. Fair enough. All right. Let's move on in. Earnings this week. You ready?
yep.
Tuesday, 422. We got GE Aerospace coming in. Got the next two here are so they're related. Lockheed Martin and Northrop Grumman. The reason why I have this on my list of things to watch this week is we have current problems right now in Israel, in the Gulf, in Ukraine, in Russia. I want to see what both of these companies are saying about sales. I want to see what they're saying in regards to is there an increase in demand of due to these wars? Is the U.S. firing off all these missiles, spending like 10 million a missile, really adding up the sales for these? You know, because you also have Boeing coming up, and Boeing makes the Apache helicopter, among other things, for the militaries around the world.
Boeing
So
will be
that
interesting too for China with them having canceled contracts.
right, they just sent the Boeing plane back to the United States from China too. That was the headline I read.
And it
Um,
made it.
it made it without a door flying off. Also on Tuesday after the bell, Tesla. Tesla's going to be a big one to watch. It's going to be a mover of the market Tesla after the bell. See what they say. They're having trouble. They delayed the release of a mid-size SUV, and they're saying that that's going to come out soon. It's just a low cost. Everybody's complaining about the aging of Tesla models, that it's the same models. They want to see newer models come out, and this was going to be the first newer model and a low cost SUV EV, and it has been delayed. So I want to see what Tesla says in its earnings call about that on Tuesday after the bell. Wednesday, that's when we have Bowen. We have Bowen. We have GE Vernova, which I own. That's why I put it on here. Nothing else besides I own it, and I'm looking for more of these nuclear power plants that are going to be going up around the U.S. What's the news on that, and is that going through? MI Homes, because something I look at as far as an economy going having a downturn is home sales, home building, anything related with homes. That's a big aspect of the economy. I want to see what they have to say. Norfolk Southern on Wednesday. If you don't know who that is, they are a train transport company, and I want to see how we're moving of goods. Are we moving a lot more goods, less goods? What they actually say as far as data and facts and not speculation in regards to moving goods. Norfolk Southern, that's on Wednesday.
And how
Also,
much is actually going rail, Dave, to that point, potentially
yeah,
over the road with trucks? So that'd be an interesting comparison. Is there in the next couple of weeks, do you know if there's any JB Hunt or any uh, any truck companies that are coming up here soon?
JB Hunt will probably be reporting sometime next 2 weeks, 2 to 3 weeks, and that's a
I'd
big
be
one.
I'd be interested to see here JB Hunt versus Norfolk Southern. What are you hearing on both of those? Just in relation to how much the supply chain, yada yada yada, our country, but just how those two interact. Are we seeing things move more rail, which goes slower,
But it's
cheaper,
cheaper,
but it also delays stuff getting off the yard. So are we at a point where the economy is maybe slowing down a little bit because we're moving stuff on rail versus over the road? That'd be interesting to hear.
right? Uh, Capital One and Discover. These are what are considered the more subprime credit cards and credit card companies. They are actually going through a merger process, hasn't been fully approved yet. They're going through it. That's eventually going to be the same company, but they're both now reporting on Wednesday at two different times with two different sets of numbers. Eventually, it'll be one company reporting all these numbers, looking to see what they say about default rates, delinquencies. Again, that's one thing I keep an eye on when in regards to the economy. And then move forward to Thursday. Thursday we have P&G, Procter and Gamble. Good overall view of the economy with Procter and Gamble. Southwest on Thursday. I just reported on them on this show about 3 to 4 weeks ago about the changing of the airlines at Southwest. They're now moving to more like the legacy ones, as far as you pick your seat ahead of time online. It's not just first come first serve. They're going to get rid of all that. You're going to pay for checked baggage, yada yada yada. Bags no longer fly free at Southwest. So Southwest Airline, I want to see what they report. I want to see what they're going to say in their earnings call. It's going to be interesting, right?
A lot of people are actually anticipating positive things for Southwest because of the baggage fees,
Yeah,
because it'll be another revenue stream into the company. So to your point, I'm interested to see as well how that's going to be long term, but it does make them every other carrier in essence.
right. Then Google reports Google just took a beating in the stock market this past week, mainly due to antitrust lawsuits. U.S. government even brought a big one against them. European Union has a big one against them. Those have been the headlines for Google recently. I want to see what they have to say in regards to all the antitrust lawsuits. They're saying their advertising practices are illegal and monopolistic, and that they own the software code for a lot of it. And they need to break that up. And I want to see what the response is to all these headlines recently about it. And last one,
Before
but
before
go
the
ahead.
call on that, Dave, do you have any concerns leading into that one? Do you see?
No, I
I
I
know.
own Google and I'm holding on. I have no concerns.
Okay, I was kind of curious in that one because I know you've talked a lot about headwinds versus tailwinds. It sounds like a lot of headwinds, um, but Google I'm sure has a lot of high-priced, high-paying lawyers, so it'll be interesting to see the result of that.
Right? Yeah. Yeah. Google does have some very high priced lawyers, and a lot of these antitrust lawsuits have been brought against Google for their advertising practices before, and each one is lost. I believe that's going to remain consistent in this case. Sally Mae is the last one I have to talk about, and that's just because, again, a lot of these companies reporting this week have a lot to do with what I look at as far as the economy, and if we're going to have a downturn or not, and I want to see what they all say. So these are going to be some good indicators of where we're at, where we're going, whether or not Brandon is correct and tariffs are going to be the end of us all, and we're all going to go in a recession, or whether or not there's just a slight risk to recession, and most likely we're going to be just fine. So that is what I'm looking at. It looks like you want to say something.
Well, you said you mentioned that at the end of the day, apparently it won't mean much anyways, because they're saying in 6 years we'll all be taken over by AI anyways. So, I'm going to set that
There you
up for
go.
you and Brandon next week on the podcast that do with it what you will.
Do with it what you will. Final thought, Nick. Final thought.
I think the final two pieces I have is again, don't be afraid of the tariffs. Um, see it as a buying opportunity. And second piece is there's a lot of opportunity out there. Do an analysis, take your time to do it. Don't necessarily feel like you need to jump the gun, but try to buy some stuff while they're low before things potentially jump up here over the next couple weeks, month or so.
All right, my final thought is I made quite a huge return off a company recently in the group chat. Everybody got when I posted about it. I had a nice big percentage of return on it. The company was Janover, and nothing really much about the company other than they were getting bought out and being the licenses and permits that this company owns was being repurposed for a new purpose, and that's what caused the company to skyrocket. The ticker symbol is JNVR. But having made that much profit off that company is allowing me to sell another company that I'm taking a big loss on, over a 20% loss on, and that's Novo Nordisk. I had bought the company expecting that these compounding uh, pharmaceutical companies were going to lose their licenses due to the time running up and no longer being a medical need for these to be made by these compounding pharmaceuticals. However, that's being drawn out. Novo Nordisk is no long is not going to get the immediate boost to their bottom line here due to that, and thus the downturn in their stock is actually worthwhile. I got that one wrong. I'm taking the 25% hit. But I had a huge return on Janover, so it eclipses that loss I'm taking on Novo Nordisk altogether, completely eclipses it, and I still come out ahead because of Janover. So I'm getting out of Novo Nordisk. Just want to put that on here, but there's still opportunity. So the money I am going to have free from Janover and Novo Nordisk gives me some opportunities to either dollar cost average on some or find better opportunities in others. And I'm always looking for new ones to invest with. So
Say a Carnival Cruise Line or American Airlines.
maybe we'll have to talk more about Carnival Cruise, not American Airlines. Staying out of airlines still. Sorry. But there you go. As always, we thank you for listening. Please hit the subscribe button. And as we hope to be entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Take care.